Welcome to this explainer. Today, we're diving deep into the latest massive earnings reports and strategic filings from Mizuho Financial Group to see exactly how they are reshaping the Japanese banking landscape. Now, if you've been following the global financial sector at all, you know that Japan is right in the middle of a historic macroeconomic shift. I mean, the long era of negative interest rates? It's officially over. Financial institutions are scrambling to recalibrate. But as we'll see today, Mizuho isn't just adapting to this change, they are actively using it to volt ahead of the pack. We're going to break down their results for the fiscal year ending March 2026, and I've got to tell you, the numbers are truly staggering.
So here is our roadmap for today's explainer. We'll start with their record-breaking profitability, look under the hood at the rate margin engine, check out their global strategic acquisitions, see how they're de-risking the balance sheet, and wrap up with what investors love most, aggressive shareholder returns. Let's get right into it.
Okay, we're kicking things off with this quote from management because it perfectly captures Mizuho's massive cultural shift. It's actually tied to an artwork they commissioned with the Tokyo University of the Arts called the Circle of Fruition. You know, for years, the market kind of saw Mizuho as a laggard when it came to capital efficiency, a legacy of challenges, they put it. But as the data is about to show us, that era is definitively over. They have completely reset their earning power.
Moving right along to Section 1, record-breaking profitability. Let's see how they're smashing the ceiling.
Just look at this number, a staggering 34.6% surge in ordinary profits. That brings them to a massive 1.57 trillion yen. But here is the really fascinating part. Their overall top-line revenue, their ordinary income, was actually broadly stable. It grew just 0.6%. So what does that mean? It means this profit surge isn't just a temporary revenue bump. It's a fundamental structural upgrade in their underlying profitability. They are driving this with incredibly strong fee businesses both inside and outside Japan, plus some really smart capital recycling by selling off cross-holding stocks.
And this chart really visualizes that dramatic leap, jumping from roughly 1.17 trillion up to 1.57 trillion yen. Thanks to this incredible operating leverage, Mizuho pushed its return on equity, or ROE, up to 11.4%. To put that into perspective for you, they had a medium-term target to just break the 10% mark, and they absolutely crushed it 2 full years early. On top of that, profit attributable to the parent company's owners rose by 10.4%, which boosted their earnings per share from 453 yen up to nearly 503 yen. Which brings us to Section 2, the rate margin engine. Let's see how they are riding these rate hikes.
So what's the real catalyst behind all this? It's the Bank of Japan's rate hikes. Mizuho was incredibly aggressive in repricing its asset book, much faster than its liability base. So while their deposit costs did tick up slightly to 0.19%, the return on their domestic loans jumped significantly, going from 0.76% up to 1.08%. That expanding spread pushes their overall domestic loan-to-deposit margin to a very impressive 0.89%. That spread right there is the core engine fundamentally recalibrating how they make money at home.
And when you break down the third quarter data, you see this growth isn't just isolated, it's across the board. Retail and business banking skyrocketed by 86%. And honestly, that's not just from interest rates. It's a structural boom in their fee-based wealth management. Their individual wealth management assets in custody reached an astronomical 68.5 trillion yen. Corporate and investment banking is up 24%, totally fueled by domestic corporate solutions. And global markets surged 74%. It really proves they know exactly how to manage assets when the market is volatile and rates are rising.
All right, Section 3, global strategic acquisitions. Let's look at how they are buying growth.
The thing is, they aren't just sitting on all this record cash like a dragon hoarding gold, they are deploying it. This timeline shows how they are strategically capturing high-margin, forward-looking markets. In September 2025, they dropped 46 billion yen to grab a majority stake in Upsider, marrying AI tech with human credit expertise. Then, by October, they closed on Augusta & Co., which is a major European financial advisory firm, locking in a spot in the renewable energy transition space. And then, in December, they acquired a majority stake in Avendus Capital for up to 47 billion rupees, planting a massive flag right in the middle of India's booming capital markets. They are seamlessly expanding their footprint, exactly where the future of finance is heading.
That takes us to Section 4, de-risking the balance sheet. Let's talk about how they're building a fortress.
Now, you might assume that with higher borrowing costs in Japan, corporate borrowers would start feeling the stress, right? Maybe see some defaults? Actually, no.
asset quality remains remarkably resilient. Mizuho's non-performing loan ratio actually dropped from 0.97% down to 0.75%. This drop is a huge signal that Japanese corporates are managing these higher borrowing costs without going insolvent, which leaves Mizuho's core lending book incredibly healthy.
Add to that their super cautious foreign bond hedging. By staying disciplined, they managed to keep their net unrealized losses flat. Furthermore, management proactively booked 133 billion yen in credit-related provisions tied specifically to the geopolitical conflicts in the Middle East. They're getting ahead of the risk. And sure, their Common Equity Tier 1 ratio, which is essentially a bank's core financial shock absorber, dipped slightly to 9.9%, but that was a totally calculated move to meet a surge in domestic financing demand. Management is making sure the group stays agile and insulates their full-year outlook from any crazy market volatility.
And finally, Section 5, Aggressive Shareholder Returns. Let's look at the investor payout.
So Mizuho is absolutely front-loading its success to reward investors. They've established a firm commitment to use a 50% minimum total payout ratio as their guide. They are pushing a progressive dividend hike too, estimating an annual dividend of 150 yen per share for fiscal 2026. That's a nice 5 yen bump year over year. And crucially, this is a big deal in Japan, they are aggressively unwinding legacy corporate cross-shareholdings. They slashed their Japanese stock holdings by 73.7 billion yen in the third quarter alone, totally on track for a massive 350 billion yen reduction by March 2028. This frees up locked capital and directly funds what we're going to see next.
Boom! Right here is the ultimate sign of their confidence. A massive 400 billion yen total share buyback program for fiscal year 2025. They executed this in strategic tranches, 100 billion in May, 200 billion in November, and another 100 billion in February. This move dramatically escalated their total payout ratio to an estimated 67% by February. It signals absolute conviction from management in their core earnings power, and obviously it significantly boosts those per-share metrics.
So where does this roadmap take us next? Well, with their old medium-term goals already in the rearview mirror, Mizuho just set a new, incredibly aggressive profit ceiling for the end of the decade. By fiscal year 2028, they are targeting an ROE of over 12% and a massive net business profit range of 1.8 to 2.0 trillion yen. And here's a little secret. They are likely lowballing their short-term forecasts to account for conservative rate assumptions. The underlying normalized trajectory, it points strictly upward.
Which leaves us with this final thought to consider today. As interest rates in Japan continue to normalize, and with Mizuho rapidly expanding its global footprint into AI, renewable energy, and emerging markets, have they truly transitioned from a legacy laggard to the undisputed heavyweight of Japanese finance? Looking at the sheer momentum in the numbers today, they certainly make a compelling case. Thank you for joining me for this explainer. Keep your eyes on the data, and we'll see you next time.